Hey, everybody, welcome. I'm A Bissen, and today with me is Ryan Obenreder with State Insurance. Now, he's my insurance guy, and we're so lucky to have him on this episode here today to share with us more about insurance, help us all get a little smarter, and especially if you're buying a house or if you've been wondering what's been going on with homeowners insurance here in the state of Florida for the last, I'd say, 2 years, then he's here to help us learn more about why it's happening and maybe if there's any relief in sight. So Ryan, how you doing today?
Doing all right. Doing pretty good.
Well, great to have you.
Thanks for having me.
So talk to us. What's going on with the state of insurance here in Florida?
So it's pretty awful.
Yeah, tell me. I saw the bill.
Yeah, rates are up. Capacity is down. Pretty much everything's been going, for the most part, to Citizens, which is, I'll say, good because it's an option. It's bad because it's all funded by really the taxpayers. So if Citizens gets too large, they have too many claims, there's an assessment that can be made on with all the taxpayers. So that's kind of one of the problems that we're dealing with now is with Citizens being inflated with policies. So yes, that's been a big problem. But as far as just the rates have gone, one of the things that is a big factor which should be fixed with some new legislation that was passed. Mm-hmm. A lot of it regarding roofing fraud. So kind of a problem that's been plaguing our state is roofers go around knocking on doors, causing literally billions over the roofing claims.
Rewind the clock for us. Tell us what happened here. I mean, everybody's seen if you own a home already, you already know. But for those who haven't gotten the bill yet, or if they're looking to buy a home, the cost of insurance is adding to the cost of home ownership. We know that because we're qualifying loans and the cost of insurance is in some cases doubled or even tripled. And it has a trickle effect on everything. But talk to us about how did this happen? I mean, this isn't new. People are waking up to it.
Yeah.
But this situation is not new by any stretch in the imagination. So rewind the clock for us. Tell us what happened. How did this start?
A couple of years ago, an attorney found a loophole in policies, teamed up with roofers, and then really started, I'll say, exploiting that loophole. And kind of how it worked was, I'll say there's two aspects to the, I'll say, game that they played. The first is there's a part in a policy that allows a homeowner to assign their policy rights to a third party. It was called assignment of benefits.
Okay.
The second part of the puzzle is Florida used to be a one-way attorney fee state, which meant if you sued an insurance company, no matter who won, so the insurance company won or lost, the insurance company always had to pay their own legal fees. Mm-hmm. So they're always on the hook and always that clock is always ticking. And if the insurance company lost, they had to pay the winning party's legal fees with a 4x multiplier in some cases. So just created an environment for a lot of lawsuits and a lot of, again, taking advantage of the situation. So roofers would go into a neighborhood, they would start knocking on doors and say, it looked like you have some storm damage. Good news is we can get you a free roof. All you have to do is sign some paperwork and we'll take it from there.
And that's what they began representing homeowners in their own best interest as well. Let's just call it simultaneous best interest to handle the roof claim on behalf of the homeowner.
Yep. And that's where the problem would start. And a lot of times the homeowner, once they signed the policy or once they signed over the policy, they would have no idea what's going on behind the scenes. So the roofer would file a claim with the insurance company. And let's say a normal roof was $10,000. They may bill the insurance company $30,000 for that roof replacement. And if the insurance company pushes back, the roofer then had the rights to sue the insurance company on the homeowner's behalf. And that's where that game began, where a lot of times it's cheaper just to pay this claim, or is it better to try to fight it in court and trying to weigh out the odds?
I think I heard of a really egregious scenario to bring this home in real numbers for folks. Something about it was like a $50,000 roof claim, and it ended up costing over $600,000 or $700,000 in legal fees for a $50,000 claim.
Yeah,
that's the type of disparity that we're talking about, and why so many insurance companies, carriers have gone out of business, or they've either been literally legally shut down.
Yeah,
because the claims and the legal fees bankrupted them. They couldn't operate. So courts shut them down. Mm-hmm. And the ones that were left opted, you know what? Maybe it's too rich for our blood. So I think the most recent notable carrier to pull out that I'm aware of. At least you might know of others, but Farmers was the big one.
Yeah.
That was an earthquake. I remember that one coming through,
Yeah. And that's what I've heard Florida is kind of the anchor to a lot of these big insurance companies like Homeowners, Progressive, where if you're not careful, that anchor could sink the ship. And with Florida, just the litigious nature of Florida and just the literally billions of dollars that were paid out for relief claims, coupled with hurricanes, and Hurricane Ian was the largest storm our state's seen. It just kind of left this, I'll say, perfect storm for companies going insolvent. And then the ones that are left had to take rate increases to make sure they didn't, follow that.
and they passed.
Solid.
They had to pass that risk and that cost along to consumers, hence our bills going up.
Exactly.
So, yeah, that makes a lot of sense.
Yeah.
Unfortunately, it makes a lot of sense. Yeah. So they fixed the law, as I understand it correctly. They did fix the law, but right before it happened,
Yeah, there was over 300,000 lawsuits that were put into the system. So that's where, and Florida's unique, especially on the, like home insurance side. Policies are 12 months. So it's going to take about 12 months for everything to work itself through with all the new language on the new policies. And then also you have a year to file like hurricane claims. So there's about a year and a half, 2-year kind of tail, they call it, before every policy and every claim situation will be under the new law. So a couple months ago, everything was signed into effect. And it's going to take about a year and a half, 2 years to really see the results of that.
have it kind of work its way down to the policy holders,
Exactly.
to our premiums as homeowners, right?
Yeah. And that's where most people don't realize a lot of insurance companies, when they have to file, insurance in Florida is such a heavily regulated market. When they're filing their rates with the state, a lot of them are only baking in like a 4% profit margin. That's it. So when claims go down, rates go down because they just stay within that 4% margin.
Wow. So insurance is one thing. And of course we have reinsurance as well. So if you're not familiar with reinsurance is like insurance for insurance companies.
Exactly.
I mean,
Yeah.
and that's how I have always thought about it. So we have a reinsurance problem here too.
Yeah.
That was due to the hurricane, wasn't it?
Yeah. And a lot of world events too, a lot of earthquakes. So a lot of the reinsurance, I'll say market, it's effective globally. So, and you're right. It's a insurance policy that insurance companies get over their entire book of business. So for conversation's sake, let's say, a company like Progressive insures, the number's probably a lot higher than that. But let's say it's $1 billion worth of property in Florida, meaning if every home were to be completely wiped off, burnt down, it would cost Progressive $1 billion to rebuild all those homes. So what Progressives can do is it's a lot more complicated than this, but essentially they can get $1 billion policy over their book of business. So they may have a $10 million deductible. So a hurricane comes through, they're responsible for the first $10 million, but clearly anything after that hits reinsurance. And as you can imagine, those reinsurance policies are extremely expensive. And the capital is, I'll say, limited of the companies that are investing in these reinsurance companies that are allowing to fund all this reinsurance. So when a global event happens like an earthquake, tsunami, or hurricane, even though it's not in our state, it's still affecting the insurance market, which of course will trickle down to us as policyholders.
Fun.
Yeah.
So they have their own insurance premiums to pay, and they went up.
Exactly.
So,
yeah.
And as if you've ever been in business, that ends up working its way down to the customer. So the good news is we have it fixed.
Yes.
Bad news is we got to wait a while,
We gotta wait a little patience.
probably 10, 12 months, something like that,
Yeah.
roughly. And then we'll hopefully start seeing things come down. Hopefully we'll get some relief.
Seeing some positive, I'll say indicators where in the past, like farmers leading the state, companies are just leading the state. There's for 2024, for next year, there's already 2 companies that are applied to do business in Florida that are brand new companies. So,
That's good.
so a lot of the bad blood is gone.
Mhm.
And there's a kind of a clean slate for a lot of these new companies. So that's where we're hoping these new companies coming in, more competition. As more competition comes in,
Yeah.
prices will benefit. Prices.
There was no incentive for anybody to come here with as chaotic as the marketplace was for them. Just to also explain it a little bit better, to bring it home in real numbers, what percentage, like if you talked about a carrier that was in, 45, 50 states, Florida was accounting for more claim payouts and cost than the other 95 to 99% of the other states.
Yeah. I think the statistic was out of all of the claims that were filed, Florida represented, I want to say it was like 12 to 15%, but of the payout, it represents like 80, almost 90% of the total payouts amounts. So it's just, even though Florida in this grand scheme of things is a small portion of the claims being filed, it's definitely the largest payout amount is happening in our state.
So that's insane. The other types of policies that were affected were master insurance policies. I know I live in a townhome and our master policy insurance doubled in one year. Doubled. And that premium had to be spread around to all the homeowners in our community. So is that related to the same situation? Or was that more hurricane related, or is it like this perfect storm?
Kind of both. I think the hurricanes, reinsurance, condo associations or common associations weren't really affected that much as far as like the roofing side go. That was more on the residential side. But I know in Miami where that condo collapsed, that caused a lot of insurance companies to reevaluate how homes were constructed, the locations of them, and then of course the distance to coast. They call it wind capacity.
Right.
All of that kind of plays into what is a healthy risk for an insurance company to say yes, we'll insure this home or this complex.
Yes, that played into qualification guidelines this year as well for people applying to buy a home that was a condo. Now, condos are unique in mortgage lending because it's the only home loan where not only do you have to qualify, but the condo association itself has to meet the guidelines. This doesn't happen with townhomes or single families. It only happens with condominiums. And that's some legal verbiage. A condominium can be a tower. It can be technically a one story. It just depends upon the legal status and how it's drawn up. But if it's a condo, then by Florida law this year, the condominium itself had to order an engineering report that was required. And to make sure that after that, the Surfside, the Surfside condo tower that fell, what happened, it forced everybody to just take a pause for a second and say, okay, maybe we really need to look at the quality of construction and how these buildings are holding up over time. And when they lifted up the mat to look what was under there, there's a lot of, they found a lot, there's a lot of good ones, but there were a lot of really bad ones under, people don't want to pay for things. They think their dues pay for everything. And they do up until a certain point, but buildings have to be kept up, especially coastal. The salt, everything else gets into the rebar. It gets into it. The concrete begins to crumble, and those things have to be remediated over time. So, these are things that are obviously going to play into insurance as well. I assume that the insurance, commercial insurance, which condo master policies, by the way, are commercial products. They're commercial. They're not residential. Residential is meaning you and your insurance company. You can bundle your car with your house. You can do all that wonderful stuff, but you can't, you're not technically the loss payee. So the master insurance policy for these types of structures covers the outside, where your own policy for a condominium would cover the inside. Mm-hmm. And the same kind of holds true in a similar fashion for townhomes, villas, etc. But yeah, this is a weird time. It really is. It is just a weird.
Put it all behind us.
I know, right? Yeah. And with this year, with interest rates being as bad as they are, people are getting hit pretty hard. Mm-hmm. And we see it in the pre-qualification. I've seen people that started off, they were able to buy a $500,000, $600,000 house, and now they're down to $300,000 just because of the cost of the mortgage through higher interest rates. And we started off the year around, the threes. And as of this month, we're around 8 for the conventional 30-year fixed rate mortgage. My first mortgage was 8.5. That was 20 years ago. Wow. Okay. Well, what time is it? Yeah. Hey, 20 years ago, that was the 80s, right? Wait, that was the 90s. No, wait. No. Okay.
2000.
Okay, we're ancient. Okay. So we're dating ourselves. So this has been great. Great information. And if you guys have any questions regarding insurance, homeowners insurance, car insurance, even commercial, this is the gentleman to call. This is Ryan Obenreder with State Insurance. Ryan, thanks so much for joining us today.
Oh, thanks for having me.
Yeah. And I'm Derek Bissen, and this is Unconventional Lending.